Welcome back to Invest Africa, where this week we are talking about infrastructure on the African continent. Still with me are my guests, Dibash Scott, Head of Infrastructure for Africa at KPMG. And from Lagos, we've got Wale Shonibari, Managing Director, Investment Banking at UBA Capital. And on the phone from Nairobi, Gabriel Negatu, the Regional Director for the African Development Bank. Let me begin with you, Dibash, and just talk about the challenge of managing these very, very complex projects on the African continent. We do know, of course, that one of the things that Africa lacks is skills and management expertise. Just in terms of the overall trend in costs on these very, very big projects in most of the time, just give me a sense of what kind of trend you're picking up in terms of the costs.
I think that is one of the key challenges, Godfrey, in any infrastructure project, is how to manage that. You know, it's all fine and well to go through the feasibility studies and the procurement and how to structure it, and then to find your partners and then to manage it going forward. Now, there's fairly sophisticated processes that has been developed that are available for project and contract management post-financial close, and to make sure that on a very regular basis that all the milestones, all the thresholds, all the targets are very carefully looked at, that red lights are picked up when they should be picked up, far before they are red. So processes are available. And quite frankly, as we are speaking, are being utilized in Africa, in the continent already.
But what are we seeing in terms of those costs? Are we seeing a trend high upwards? Because often when we speak about Africa, we say it's, there's lots of opportunity, but also it's high risk. But at the same time, your returns are better. But if your costs are escalating out of line, you are unlikely to be able to realize those returns.
Yeah, I think the cost, the control of the costs are improving. I think the basic quality of contracting is improving. As more and more transactions are being done, as the legal frameworks and the regulatory frameworks and the banks' involvements are, more and more increasing, the likelihood and the recurrence of serious cost overruns out of control, it's less of an issue.
Yeah, Gabriel,
still an issue, but less of an issue.
Yeah, Gabriel, you of course at the African Development Bank, you work with African governments to help them manage these large projects. What are you doing as a bank to help them have the infrastructure that will help reduce the costs of these projects?
Yeah, thanks, Godfrey. This issue of cost management is a concern both to the bank itself and to our member countries. And there are several sort of explanatory factors, if you will, why you get overruns. And as the previous speaker said, there are some good progresses being made, but it still remains that the timely procurement processes are causing cost overruns. The failure to properly prepare and package projects, unrealistic implementation schedules, technical and financial lack of technical and financial audits, and of course would be remiss if we didn't talk about corruption also. So all of these are indeed adding to cost overruns and becoming management problems. But we are working with member countries. What we do, Godfrey, is when we give a loan or a grant to country X to build the 100 kilometers of road, we also attach some grant money, free money, to help build the institutional capacity of the roads authority in a given country, so that the engineering side, the procurement side, the management side is all addressed, so that it reduces the transaction time and cost of completing these roads. In addition, we are doing very close supervision and audit, value for money audits in terms of roads. If it costs $1 million to build a road, 1 kilometer of road in Kenya, and $1.5 million in Uganda, then we are doing an audit to find out, besides the geographic differences and the topographic differences, why is it costing so much? And of course, we're finding different types of reasons, and we are working to address all of those. And this is true across the continent.
Yeah, and of course that will continue to be a continuing challenge. But let me ask you, Wale, now you of course are inside a bank that does lend for infrastructure projects. Are you seeing a difference in terms of the interventions that the institutions like the African Development Bank are putting in to try and help governments reduce the cost of doing business and therefore be able to attract even more investors to come in and perhaps invest their money long term in infrastructure projects?
We get involved in raising money for projects, and we take projects to the likes of African Development Bank to provide the long-term financing required for these projects, because it's often difficult to raise long-term local currency financing. So African Development Bank has been very helpful in bringing in facilities to address that gap in the market. We're generally seeing more interest from all the DFIs in our markets, and interestingly, many of them are raising funds in local currency that they can then deploy into local projects, because they don't want the project sponsors to be worried about exchange rate risks alongside all the other factors that increase the cost of building and operating an infrastructure project.
Yeah.
So to that extent, the likes of the IFC, African Development Bank, and others are looking at different ways through local capital markets to raise long-term financing in local currency, and that's to be encouraged. UBA Capital plays a significant role in that process as a capital markets issuing house to help them raise the funds.
Yeah, but give us a sense in terms of the interest that you are seeing from institutions and organizations that want to come and invest in these long-term projects. Just how difficult is it to raise money? Let's say, for instance, one of the projects that made the top 100 here on the KPMG list is the blue line of the Lagos railway network. How difficult is it to raise the money that's needed for such long-term projects?
Well, the blue line is indeed an emerging success story in Lagos. Parts of the blue line infrastructure have already been built and they're to be seen. The basic infrastructure is being funded by government, but the private sector will run the rail services. It's getting easier because the first PPP that was done in this environment took about 4 years to negotiate, and other subsequent ones are being done more quickly because the templates have been established. The main issue is to have the right regulatory environment and legal framework to allow these projects to be done. And that's what allows the investors to be able to come in and deploy their funds, knowing full well that they'll be secured.
Yeah.
So what we're seeing is that there's significant amount of enthusiasm, but the projects are not emerging fast enough. There's probably more money around than there are good projects.
Wow, I like that story. I like that story. It's certainly the one that I'll be following up. And I'm glad you talk about the issue of regulatory and environments and improving them, because it's one of the issues that we raised with Presidents Jacob Zuma as well as Goodluck Jonathan in our debate that was held at the World Economic Forum in Davos. But let me come to you, Dibash, and talk about some of the issues that he raised. He says there's more money that's available for these long-term projects than there is projects becoming available. And yet we do know that there are a lot of projects that are happening, and the fact that we've got 6 in the top 100 suggests that a lot of these are coming through. And also what I heard from Gabriel is the suggestion that the African Development Bank is bringing a lot of these projects online as well.
I think exactly how much money is available is always the question.
Yeah, because we were discussing earlier, and we were saying there is a gap, and the gap estimated 2 years ago was that $93 billion annually is short of the money that needs to be pumped into the infrastructure. Yes,
and my comment at that time was that that gap is at least 50 billion rand, $15 billion, and it's a growing gap. It will continue to grow. I think the most important point is that, as far as we're concerned, money is not a problem on the continent. Money is available for proper projects, that's gone through proper rigor, that's been properly feasibility studied, that the all the disciplines, and the gentleman from the African Development Bank touched on all those issues. It's been all the proper due diligences, all the proper audits have been done. The technical side is properly done. The value for money calculations are all done. Once a project has gone through a proper feasibility study process, that is typical to a normal PPP process, money is available for it. The problem is
the money is there.
There is money at that point of time. Is normally there. There are not enough people on the continent that are doing these feasibility studies, and there's not enough of them being done, and often funding for these studies are not that easily available. That's normally grant funded, etc. So it's a little bit of a catch-22 position.
Yeah, what do you bring first? Do you bring the infrastructure first and then economic growth will follow, or do you begin with growth and then infrastructure to support that growth then comes along?
Absolutely, and how to take that first step to build a bit of track record and to build a bit of interest and to get the process going.
Final closing thoughts from you, Gabriel.
Final thoughts. Well, I think as the previous speaker just said, there is more money looking for good bankable projects, where all the due diligence, all the technical specs have been sorted out. So the focus of our discussion should not only revolve around funding. Yes, funding is an issue, it's a priority, and we all need to be aware of it. But I think the greater need to focus ourselves on sort of clarity of purpose and fit of what it is that we're trying to do, get the technical and everything sorted out. And once we do that, I think we're well on our way. This continent, any part of the continent you pick, needs major growth in infrastructure. Yeah. That's scheduled to happen. So I think we're all poised to support that process wholeheartedly.
Absolutely. I like that story. That's emerging. Let's quickly go to Wale.
For me, the main challenge is to unlock the capital markets in local currency to allow project promoters to be able to borrow in their own currency, because that is significant. The US doesn't fund its infrastructure in Swiss francs. They always use dollars, and that's a shift that we're seeing in Nigeria, where our local capital markets are getting deeper, and as a result, we can use the savings in the economy and deploy those through pension funds that are investing in companies that are in infrastructure sectors, etc., to be able to provide long-term funding for our local projects, where most of the revenues are also in local currency.
Absolutely. Thank you very much indeed. That's all we have time for in this edition of Invest Africa. Thank you to my guest. That's Dibash Scott. He's Head of Infrastructure for Africa at KPMG. Until next time from me, goodbye.